My name is Olav Jones, and I am Deputy Director General at Insurance Europe, and it's my pleasure to be moderating this panel. We've heard a great many different things so far about the protection gaps and the challenges. In this panel, we'll be focusing on the areas of life insurance, pensions, and health, and in particular, looking at potential solutions, or at least ways of closing the gaps, because I think in some cases there aren't full solutions. But before I introduce the panel and we make a start, I would like to make just a quick announcement of a small change to the program. Right after this panel, we'll be hearing the keynote speech from MEP Marcus Ferber, which covers also some of the topics on this panel, and then we'll move to the coffee break after the video presentation from MEP Marcus Ferber. But now I will move on to my introductions and the panel, my distinguished panelists. I'm very happy to have here with me on the stage Susan Neely, President and CEO of the American Council of Life Insurers, the ACLI, Yoshi Kawai, Chair of the OECD Insurance and Private Pensions Committee, Florence Lustman, President of France Assureurs, and Mojca Rome, Secretarial Secretary of the Insurance Supervision Agency in Slovenia. So we also have a mix of policymaking, academics, and supervision, and the industry. We'll aim to leave some time at the end for Q&As, so please do use the app if you would like to ask any questions. Now, I think we'll move straight into the discussion. We've just seen a short video with the results of the Pan-European Pension Survey conducted by Insurance Europe in 2021. And this showed, as we said, unfortunately, 1/3 of respondents are not saving, just over 1/3 are not saving for their retirement. So allow me to start with a few questions on the insurance and pensions. And I'll pass this question on to Yoshi. I remember when I first joined the insurance industry, I heard that people saying that life and pensions products are ones which are sold rather than bought, meaning that people don't naturally buy them even if they need them. Do you think this is still true or partly true today? And if so, what can be done to raise people's awareness of the need to save for their pensions and the need for insurance?
This question, insurance is sold than bought. I think this is totally wrong approach, thinking about protection gap, particularly pension or saving. When I hear, or when we hear this morning, the key issue of the problem is not the insurance companies and policyholders' relationship, but it's more society understanding the issue. Because we discussed protection gap is a huge, and the most important protection gap is pension and saving. The number of Geneva Association World Economic Forum mentioned that protection gap of saving and annuities type of one is $100 trillion. Of course, it's accumulation, and the World Economic Forum mentioned $70 trillion. And as we discussed this morning, climate change per annual, it's $150 or $200 billion. So protection gap of annuity is huge. And the consequence, if we leave it as it is a disaster. Disastrous in our society. Not only the current retired people, but our active people and the young generation. This is definitely we should be aware. So second question is why we are not aware of this gap or not well understood in the community. This is obviously not only our responsibility or fault, but society's fault. And I just wanted to point out politicians or policymakers have to be emphasize this point. And just as an anecdote, in my country, Japan facing enormous issue of aging society, as anybody knows. And a few years ago, my agency, Japanese Financial Services Agency supervisor, announced very elaborated good report, and which put very clear number. Each individual have to pay at least $160,000 for the retirement. And then what happened, It's excellent report. Everybody has to read it. But what happened is politicians intervened, and just because it became very political, government did not pay enough attention and so on. So politicians intervened and calmed down, and this, announcement of JFSA, our authorities report, is disappeared. Politician does not want to touch this issue, and society does not want to make transparent, honest disclosure of this problem. I think this is an enormously important issue. And when we talk about as insurers or regulators, we think that it's important for saving or so on. This is regarded as self-interest. But society understands this serious gap. And this is not only developed countries issue, emerging countries, and not only younger generation, but all generation issues. So any people, any society have to understand very, very clearly this issue of protection gap. I could emphasize this is even more than a climate issue, but people do not discuss in this way. So I just want to stress that it's not client or insurance companies issue, but it's a society's awareness issue.
Well, that's some very frightening numbers you've indicated there, and interesting point you make about maybe the lack of open and frank conversations about that, because we heard from a number of speakers in the beginning of this session today, highlighting the need for some honest truths about the situation. Florence, in 2019, a new retirement product, the Plan Épargne Retraite, was introduced in France. Could you tell us a little bit about that and which regulatory design elements were key to make the private savings more attractive to people, and whether you believe this can be part of the solution to solve some of these frightening numbers we've just heard?
Certainly, and first thank you for the invitation. Let me briefly just remind you of the organization of our pension system in France. So we first have a first level of public, universal, pay-as-you-go scheme. We have a second level, which is also mandatory and which is funded by contribution by the employers. And we, insurance company, arrive at the third level, which is a private, volunteer based scheme, which is fully funded, of course, because it is insurance. Apart from that, these are pure pension schemes. We do not have any private pension funds, such as you can find in other countries in Europe. But we have a large amount. We have 1,800 billion euros in life insurance, which is basically savings contract, which serve also for retirement. So this is the background against which effectively government in 2019 launched this new pension product. The objective of the government were numerous. In fact, they had three objectives. The first being to enhance competition between insurers and asset managers. And in fact, the PER, the Plan d'Épargne Retraite, can be an insurance contract, but it can also be a securities account. So asset managers and insurance companies can sell nearly, not exactly, but nearly the same product. Second, they wanted to encourage, I would say, very long-term savings, because the average duration of our life insurance contract is already 12 years, which is already pretty long. But yes, to foster investment in shares in particular, they wanted longer commitments. That was the third objective, and the second objective. And the third one was to reach over 3 million policyholders for this new contract by the end of 2022. So what is the product? So the product has a target date fund management in order to be able to increase the risk-taking in the management of the assets. It benefits from enhanced transferability. It benefits from fiscal advantage also. It offers the possibility to exit either in capital or in annuity. Of course, you need to go through an insurance company if you want to have this possibility to exit with annuities. And of course, if you are in an insurance product, you have a death warranty. What is the result less than 3 years after the launch of this product? It's very positive. I should add that we, as an industry, we have taken an additional commitment regarding the transparency of the fees in particular, and we have imagined a single format to communicate with the prospects and the policyholders in order to enhance comparability and transparency. And the result of all that is that at the end of 2021, so 1 year before the end of 2022, we have 4.3 million subscribers, so much more than the goal that was 3 million, but 1 year later, and 50 billion euros on these contracts. In fact, the success is mainly due to insurers. We represent 87% of the new production of these contracts. So I think it really proves the fact that in the general public, retirement products are really linked to safety. I thought it was very interesting to point out the fact that the objective number one is safety, and safety means insurance product. So I guess that's the reason why we do nearly 90% of the production. This new product did not cannibalize at all the rest of life insurance, because we have growing premiums also on life insurance. And last but not least, 50% of the premiums on these contracts are invested in unit-linked. So, of course, it favors an investment in shares.
Okay. Well, it's very good to hear that sometimes these initiatives can have an impact, and a positive impact, with the insurance industry working with the regulation to provide success. I think you mentioned the pension survey where security remains a key concern, in fact, the number one concern for many people in Europe. Susan, in the US, what is the situation there? Are there different types of insurance products? And are customers aware of how they can help them in retirement? And what's their view in terms of safety and security of pension products?
Well, first, thank you for inviting the U.S. perspective to the Insurance Europe conference. As I think Yoshi said, this is a global challenge of retirement security, and we're honored to be here to share our perspective. I looked at the statistics in your video, and I'll share some of our own from the U.S., which they're not parallel statistics, but it may mean that we have a more acute crisis than even Europe. Just to give you a perspective on what the retirement savings gap is in the US, the protection gap, 25% of, or rather 1/3 of baby boomers that are turning 65 have only $0 to $25,000 in savings. So 1/3 of retirement age people have inadequate savings. 10,000 to 11,000 people are turning 65 each day between now and 2030. And our social security system, our government-sponsored social security system, which was always intended to be just a safety net, not your sole source of retirement income, is projected not to be able to pay its bills completely starting in 2034. So the situation is grim. It was grim before the pandemic and has certainly been exacerbated during the pandemic as more people dipped into emergency savings and or retirement savings to make ends meet. And as we think about, in particular, where there are greater areas of need, as you focused on in your survey, Olav, women, We use the phrase a she session in the US. I think the United Nations has projected that we may have lost a generation of gains in terms of gender equality. Well, certainly there's been a she session in the US because women were the first to quit their jobs to deal with online school and caregiving responsibilities. They were already in many cases in lower paid jobs. So women who were challenged before the pandemic as they look to retirement are even more so now. Black Americans, 70% dipped into emergency savings. Hispanic, brown Americans, 60% dipped into savings. So again, where there was inequity and concern and gaps before the pandemic, we're well aware that the needs are more acute now. What I would say in terms of areas of focus, I think before you get to products, you have to deal with some of the things that you teed up in your video, like financial education. People need to know what their needs are and their options are. There's an interesting statistic from the Wharton School of Business at the University of Pennsylvania that 1/3 of financial inequality can be addressed by financial literacy. To me, I always look for action, and that's an actionable data point. You need financial education. At ACLI, we have a strong, robust partnership with an organization called Junior Achievement that is literally in the schools. They have a K-12 curriculum that's appropriate for the age of the child to help them understand basic financial planning. Certainly our member companies are actively engaged in these kind of programs and have their own financial education efforts underway. So I think we can't put enough attention on that, helping people understand the basics of financial planning and then how to address the retirement savings, which gets me to policy, which is our area of focus at ACLI. And I will say this is one area I will speak proudly on behalf of the US Congress, that they understand there's a crisis and they have been actively trying to advance solutions to it. We can talk more about policy as we carry on the conversation, but in 2019 we passed a major piece of policy legislation. We're poised to do so again, and I can go into more detail about that, but the main focus we have as an organization trying to help drive this and support Congress in its effort is increasing access to retirement savings vehicles through the private sector employer-based system. So having more products available and more access, and we call them nudges like auto-enrollment, to help people help themselves. So we can talk more about this, but that's just the picture of our challenge and sort of strategically how we're trying to approach it and drive towards solutions.
Thank you. It sounds like if you did the survey in America, you may get quite similar results as we found in Europe, and with again, some worrying numbers in terms of how little people are saving, and maybe that links back to the gap that Yoshi mentioned. But moving over to Mojca, there are a number of European initiatives underway, some of which EIOPA has been involved in, and some of which are on a national level. These include, for example, the pension dashboard tracking services, the new PEP product, for example. What are your general views about these initiatives, or are there initiatives in Slovenia, and are you as a supervisor involved in any of these?
Thank you. Thank you for inviting me here to this lovely city, lovely event. Regarding your question, so I will start with PEP. PEP initiative, it was quite, I think, nearly 10 years ago when Commission started this initiative. And when we look now to figures, how much companies they would like to offer this product to the customers, we find out in Slovenia, for instance, that just 2 of 20 companies, they are thinking about to offer it in the future. And as much as I know, it is the same in all Europe. So companies are not in favor in this product, and I'm sure they will offer it to the customers, but they will not hurry. Regarding pension tracking system and pension dashboard, I think that those projects are much better accepted among member states, and it should be also among policymakers. It is not for supervisors, this is for governments, and they have to prepare everything that a pension tracking system, it is for me most important, to be in place in every member state as soon as possible. So the citizens will have in one place the comprehensive information regarding future retirement, regarding first pillar pension, second pillar, and third. And we cannot forget, we are speaking today mostly about private pensions, private insurance, but first pillar pension in Europe will remain, as my opinion is, will remain the most important part, especially in Slovenia. But this can help people to become aware how important it is to start saving. And just to persuading them, look, come, invest, join the pension fund is not enough. With the real numbers, the arguments can be stronger. But why people, they don't want to join? We can see that people can join just defined contribution schemes without any guarantees, and according to the video, they like guarantees. They like investment guarantee especially. And with the returns, as it was now for a few years or decade, there were no return on the assets. The costs were constantly there. The pension funds, they were collecting costs. The return was slow, so the trust decreased, probably also because of this.
Okay.
Thank you.
Thank you. Well, I think that we've seen from discussion on pension savings, there's a huge challenge ahead. There are some things which seem to be can be done to be helping. Some of that's around education and maybe giving, alongside education, giving people an overview of all their savings through maybe some of these dashboard type projects, but still clearly a lot to do. Big challenges ahead. But maybe now we could move on to health, because it's another major area where there can be concerns about protection gaps. Although, of course, insurers' involvement in the area varies greatly within Europe, but certainly across the world and different regions. Florence, if I could turn to you to this question. In Europe, health remains very much a national competence. As health systems are increasingly under pressure, do you see the role of insurers changing moving forward? And related to that, can the use of health data improve insurability on health? And how does technology and innovation link into all of that, as well as some of the concerns about data usage and technology?
Well, I will say a few words about my country, which is the market that I knew. We have once again a two-pillar organization for health, social security on the one hand, which covers roughly 80% of the cost, and then the insurance, health insurance companies, which cover the 20 remaining percent. 20% that can be much more when I'm coming to glasses, to dental, to audio prostheses, but roughly that's 80-20. But we do not only provide reimbursements, which is effective because the remaining cost for our citizens is the lowest in the EU at 6.9% of the cost of health for them. We are also direct actors of the health system. We provide prevention schemes. We provide a lot of services around the act. Of course, we're not doctors, and we do not intend to become doctors, but we produce a lot of services around the illness and in order to help the patient. What we have noticed, even before the COVID crisis, shed a light on the difficulties and the insufficiencies of our health system. So we decided to write a white paper together with more than 50 health experts in France, coming from the public sector, coming from the private sector, and we all agree that there are 4 challenges ahead of us. These challenges are the following. The first one being the inequality in access to care and cure. The second, between the patient care fragmentation, even with the services that we provide, but basically it's a very fragmented pathway, I would say. The lack of prevention, and the financial consequences which will be transferred to the next generation. And we articulated a number of suggestions based on what we are able to offer as part of the solutions that are needed to meet all these challenges. And this is linked to our very specific place in the system. Contrary to the social security, we can talk, and sometimes we talk to our policyholder every day and all through the life cycle. Contrary to the social security, which knows us only when we are ill and that we need a reimbursement. That makes of us specifically designated actors for prevention. And I think it's a real opportunity, because since we are also, as we all know, major investors, we invest a lot in technology, in health technology, and so we are well aware of all the emerging technology that will revolutionize health in the coming years. So we should be able to pass this innovation to the larger public, because we cover 96% of the population with our health contracts, so that's nearly nobody. So if we could take this innovation and then put them in our health contract, then this would give access to innovation and to personalized prevention to 96% of the population. But there is a but. There is a but, because the ultimate prevention, health prevention, not only health, but health, requires an individual adaptation of the prevention scheme to the person. And to do so, we need to access personal data. And in my country, even if you have the explicit okay from your policyholder, there is a number of regulations that prevent you from having access to this personal health data. So I think we could do much more, but I think it should become a topic of society, of course, and I think all insurers in this room and abroad, it is our business to protect the data, not only health data. We've been dealing with the data for decades. This is the basis of our job. But now I really see a tension between innovation, which is more and more personalization, and the difficulties that we have, us, and not the GAFAM. I mean, all the others, they can do whatever they want with our personal data that they capture through our operations on the internet, for example. But when it comes to insurance and also to banking, by the way, we are somehow prevented. And I'm afraid that this will end with a loss of chance, I would say, for our fellow citizens.
I think it's very interesting, the idea of using our ongoing relationship in order to expand services. But as you say, particularly maybe in the case of health, maybe more than other areas, being able to have data and use data, obviously responsibly, is key, and there may be regulatory barriers there. Mojca, are there supervisory actions that can help either on that particular issue of being allowed to use data responsibly, or other ways in which the supervisory actions can help support insurers' appropriate role in healthcare as well?
In Slovenia, we don't have such action, but we collaborate with the government, we collaborate with the policymakers, and what we have noticed is that the health security system is not just private, it is also a public system. And in Slovenia, we faced in the past the experience that just old and probably somehow ill or nearly ill people pay the private part of the premium. The young generation, they didn't want to join the voluntary health system. That's why we changed the legislation, and we somehow forced also young generation to start with the system in the way that the premium is then lower, and if they join later, the premium is much higher. And we were quite successful with this, but there's still room for improvement, definitely. It should be really clearly defined in legislation what is paid by the social security system, with state system, and what is paid by private insurance companies. And if there is no clear limit and no clear messages, then this can be source for frauds and also for moral hazard. But we think that in all the Europe, around the Europe, it is a social environment, and that the public or governmental social security system is important and probably will become even more important because people are aging. We are aging population, and with ages, the diseases come. So we cannot forget, and government cannot forget for their responsibility for set up a healthy social security system.
Yeah. I think, yes, I think the way in which the demographics is having an impact on the health gap and the challenge of providing appropriate health care to populations, I think is also key. Moving to Yoshi, in terms of the international activities, can you tell us something about maybe the work of the OECD in this area of health protection and protection gaps?
Yes, thank you, Olav. So OECD, as I hope everybody knows, we are sort of, intergovernmental think tank, which collaborate with our member countries' government officials. And our committee is only committee in the OECD that we work closely private sector. So we welcome your participation to the OECD. And thanks to the participation of private sector, recently we did a comprehensive study of social security system as well as private insurance system in the healthcare, as well as long-term care insurance. And this is very, very revealing because usually it's a very, how they say, silo approach. Government, social security, and private healthcare is very much different authorities, But we just, thanks to your support, we enable to collect public sector information as well as private sector information. And it's very revealing. And what we have found out is, first of all countries, except the United States, sorry to mention, have universal healthcare system. So to some extent, so it's of course it's a lot of paradigm or spectrum there. But anyway, country in principle have a universal system, and there is a very much difference between country. How much percentage is cared by private sector and the government sector is different. But anyway, we have a good system, as Florence and Monia mentioned. That kind of system exists. But the question is, a challenge here, particularly social security system and including our country, it's so much government debt issue. So government cannot provide sufficient coverage for example, very expensive new technology-based treatment. And also deductible is trend to increase. So in other words, there are a lot of area that the private healthcare system contributes. And definitely now private sector's healthcare system plays more and more important role in the healthcare system. And much more revealing the result of a survey is long-term care. Traditionally, long-term care is, as everybody understand, if in the family some person have difficulty in daily life, child or family support. So still this tradition remains in many countries, and in that consequence, but at the same time challenge here is nuclear family, single family, there's no supporter in the family is a general trend. So we need a caregiver, or we need a long-term care service is a very much important role in our society. But system itself is not well prepared yet. Of course, US is a very developed system now, and our country, Japan, is a very aging society. We struggle to develop system. But quite often, the country itself do not provide social security to cover long-term care, and even industry are not ready to provide that service. And this is extremely important protection gap issue in the future, because as we face, we live longer, but children is less and less. And this long-term care issue is a very difficult challenge in terms of the insurance and who pay fat issue. So I just want to stress, this is a very important protection gap issue. We need further discussion with the government and private sector, and we have to find a solution.
Yeah, I think, as you say, long-term care, I think, is maybe not talked about as much as health in general, but is something that it can be a huge issue across all jurisdictions. But moving slightly away from the generic and maybe to a specific health problem, Susan, the COVID-19 crisis has had a very wide impact on people everywhere, businesses, and of course the wider economy. Do you have views on how we could be better prepared for future crises? We've already heard earlier today, I mean, it's not something that is insurable from a business interruption point of view, not something the insurance industry can solve alone, but do you see how we could be better prepared maybe collectively, insurance and policymakers and wider society?
Well, one of the I guess, positive conclusions of COVID is that in the US, the life insurance system held. Our payouts increased in 2020 by 15.4%. That was over 2019. That was the largest increase in payouts since 1918 and the global influenza pandemic. We are calculating for 2021 now, and we anticipate similar numbers. Enormous stress on the system, the state-regulated system, and the system held. So we, in our role and capacity as telling policymakers and regulators about the value of the life insurance system and life insurance products, have been talking a lot about that in proudly, because it was very important to people's lives. Interestingly, and Florence mentioned this, and it was in the video, there is increased consumer interest in life insurance as a secure product, and so we have seen increases in sales as well across the board. I guess the other thing that we learned, if you move more specifically to working with our regulators to appropriately help us foster innovation, Another positive result of COVID, in our view, was that we received regulatory accommodations to move to a more electronic-based system, e-applications, e-notarizations, e-signatures, and it worked. And as we think about how we want to engage with younger consumers, yes, Director Cameron's right, we still needed financial advisors to help at the, advise and increase financial education about what products are needed and how to have a financially secure plan. But those same consumers who are talking to their advisor or their agent also want the convenience of an electronic-based system. And we're having conversations with the NAIC now about how to make that permanent because we were forced to use it during COVID. Related to that, producer or agent licensing, we have 5 or 6 states that still don't allow online licensing exams. And again, you think about the generation we're trying to recruit, and they have to use a paper and pencil. That sort of feels like a non-starter right there. So working for those modernizations, along with being able to give producer exams and agent exams in other languages, as we're seeking to close the protection gaps with underserved communities, being able to have advisors that can speak fluent Spanish with the healthy percentage of the US that speaks Spanish as their first language. These are the kind of innovations that the pandemic allowed us to, we believe, illustrate how well they could work and how it can allow us to tackle the protection gap. And again, something we're talking in a very productive way with the NAIC and our regulators about.
Thank you. I think you've segued nicely into our final areas of discussion, which are, I think, 2 hot topics of the innovation and diversity. And these are very much under discussion across all aspects of insurance, and I think can have an impact on the protection gap. Florence, if I turn to you, our company, you mentioned already some innovation in terms of health, but more widely across life, pensions, and health, are there innovations and developments which can help contribute to reducing the gaps? And are any changes needed to foster that, regulatory or other types of changes needed to foster innovation and inclusion?
Yes, I think the French market, as most of the European markets of insurance, are very competitive and so very innovative. To meet the demand or the needs of our policyholders, we have kept innovating over the years, be it in life insurance, with the duty of advice, so to adapt either the units, to adapt the contracts to the needs of the policyholder. But I would like to take maybe 3 examples in other fields than life insurance, but in health insurance, we implemented with success a reform that was called 100% health, which means 0 cost for our citizens, those who have a private health insurance, but once again, it's 96% of the population, so nothing to pay for glasses, nothing to pay for audio prosthesis, and nothing to pay on dental, some dental cares. So this was put in place with government, but of course it's the insurance companies that really implemented the reform. It was very costly for us because, contrary to what the Ministry of Health had said, he said there should be a compensation between glasses and dental, but in fact this compensation did not occur because it's mainly in dental and glasses that people move toward these specific baskets and with nothing, nearly free for them. So it cost to my market more than 300 million euros of claims, but we definitely helped to reduce the gap because we gave access at no cost to these devices. We also created care networks always for glasses, for dental, for audio. And we negotiate the price, but we have commitments on quality. So this is a way, once again, to reduce the gap for those policyholders who want to go and buy in these networks, and it's cheaper, but still with a very high level of quality. And last but not least, regarding long-term care, but yet we still did not manage to implement it. I think we have an interesting suggestion, because not everyone will end his or her life being severely dependent. So this means that this risk can be mutualized. And we suggest to incorporate systematically in the health insurance contract a warranty to cover long-term care. I think that could be very effective. It could come into application very soon, and it would not need any euro of public money, because that can be made through the miracle of mutualization, provided that it can be mutualized among the largest population. So we have presented this initiative to government, to the previous government. They believed it was interesting, but the difficulty at the moment, at least in my country, but I had a number of bilateral meetings this morning which showed that it's not only in my country, that government hesitate to make something compulsory either for individuals or for corporates. And in my country, where we have the chance to have a beautiful natural catastrophe program that proved to be very effective and that a number of jurisdictions would like to copy, this was made in the early 80s. And of course, it is effective because it is compulsory and it is fully mutualized on all the territory. And this is the miracle of insurance. And I think we should communicate on the fact that we can find solutions to the protection gaps. But the real solution of insurance is always mutualization. So please let us mutualize. Yeah. And that would be my answer to your second question.
Well, it's interesting now to innovate. You go back to the basics of insurance and apply it in new. Yeah. So I think that's very interesting. We're running short of time, so maybe just some quick answers to finish off this section. Yoshi, there's a lot of discussion of how artificial intelligence could help reduce costs, increase the range of risks that be protected, and various other benefits. However, there are also some fears about artificial intelligence. Do you see potential opportunities or more dangers?
I see opportunities and to some extent dangers. But opportunities, protection gap concept is economic loss, difference economic loss and protected loss, right? So this, how do we address this gap? But this, thanks to AI or technological development, what could happen is we reduce the economic loss drastically, and so that we don't need sort of insurance. That's the ideal situation. And in this argument, I just want to see our life from upstream and downstream. Upstream means that, how do you say, or so-called well-being, mentally and physically fit. And then next stage is only fit, physically fit, and the middle stage is as we are. And the downstream is injured or sickness, and the ultimate downstream is passing away. So this is a spectrum of our life. And formally, or current traditional insurance covers only sort of downstream, injured, sickness, and passing away part. But we have, thanks to AI and technological development, we have an opportunity to cover more upstream and also better service to the downstream too. So more soft than hard. Hard means that provide cash. If we are injured, we receive a benefit or so on, or if we're passing away, we receive insurance and so on. But what AI could do, and now it starts happening, is prevention, preparedness, reduce the, not to be sick, not to be injured, and also will become more fit and more mentally healthy. So thanks to AI, because of wearable and so on, we have more opportunity as an industry to have upper side of our life and also reduce the risk or downside. So there's a huge, huge opportunity, and this is how do you say new spectrum or new future of the life insurance industry, which I think, of course, provided that regulation is good enough to not to abuse the technological development like data protection issue and so on, but definitely there's a huge positive perspective of our industry.
And Mojca, do you have any quick words on your view from a supervisory perspective on AI, opportunity or risk?
I'm afraid not. As you know, we, as supervisors, we don't approve products. At the end, when the product is already in the market and when we get complaints, then we get involved with individual contracts. But I would like just appeal here to the industry that with this new technologies, please produce the products that are affordable and that make value to the customers. We at EIOPA, together with EIOPA, we have this exercise many years in a row now, value for the money. So we would rather not to do this exercise to be all the products perfect and fit for purpose. Unfortunately now we see that some of the products are really costly to the customers and they don't bring any added value to customers.
Okay, well, I think from an industry point of view, we're looking at way technology can help reduce costs. So I think that's a common challenge. But maybe just to the last question to you, Susan, and moving on to maybe a little focus on diversity. What can and are insurers doing to make sure that in closing the gaps or addressing availability of insurance, that diversity is also properly addressed?
Well, we adopted a four-part commitment as the ACLI board 2 years ago, and number one is increasing availability of our important financial security products to underserved communities. The number one way to do that, of course, is the use of artificial intelligence, which, if you're doing it properly, should allow us to keep the price fair. An issue has arisen then, which we're calling from a policy standpoint, algorithmic accountability, and I think it's we are compelled as industry to be able to have those conversations in a thoughtful way with our regulators and with legislators, policymakers who are getting into the debate so that we preserve the ability to use this technology in the right way and also address any concerns about it. So we're very front-footed on that. But other things are, of course, corporate diversity. Fact of business, people will be more likely to buy products from those that understand them culturally, whether it's speaking their language or understanding their perspective. And so diversity inside the companies, inside our producer distribution agent team is really an important objective. Of course, we've talked about financial education. And the last one I would cite that we have committed as part of our four-part commitment is to increase our investments in underserved communities. And we've just launched an initiative that will allow companies that are interested in finding market rate return investments in affordable housing as sort of the core to building intergenerational wealth, the core to, we think, closing the racial intergenerational wealth gap. We are setting up a nonprofit that will allow a focus on investment in affordable housing, the ecosystem around it, and kind of take what we consider one of our key attributes as life insurers, long-term patient capital, addressing societal problems in an innovative way.
Okay, thank you. Well, we're really moving to the end of our time slot, but I think because we did ask audience for questions, I'm going to I'm going to overshoot by just a minute or so in order to ask one question that's the most popular one. And so the question is, what are your ideas to increase the propensity to save for retirement in current times of high inflation and thus even less available real income for households? So I think I will challenge each of you just to come up with your best idea or your preferred idea for what you think could be done, just in 1 or 2 words. If I could start with Susan.
What to do for retirement given
how
inflation?
How to encourage people to save despite the difficulties they're facing?
Well, I'm a policy person. I say it's mandatory auto-enrollment in the US where your employer just automatically enrolls you, and we know from our human behavioral economists that that really works.
Okay. Yoshi, do you have a...
Yes, very clear. As I said, raise awareness. People are aware.
Yeah.
Without saving, they cannot survive in the long term.
Okay.
So they raise awareness is key.
Okay. Florence, do you...
As Yoshi said, I would say start as early as possible because there will be years of inflation, there will be years of negative interest rate, but I mean this is all through the life cycle, so start early.
Yeah. Do you have a...
I have to join the first idea. Automatic auto-enrollment is the most efficient, in my opinion.
Okay. So we have auto-enrollment and education and awareness. So, okay, well that brings us to the end of our time for the panel. It's clear from the discussion that there is a lot to do, a lot being done, but also a lot more to do in order to help close insurance, pensions, and health protection gaps. A very big thanks to my panelists, Florence, Susan, Yoshi, and Mojca. Thank you all. And if you can remain seated while we move on to our keynote speech from Markus Ferber, who is a long-standing member of the European Parliament Economics and Finance Committee with a vast experience in the area of financial services. I pass over to Ferber.